Multi-timeframe Confluence often looks straightforward until you try to codify exactly how trend, momentum, volume, and structure should be weighted against each other. This breakdown walks through a weighted composite scoring model built to do exactly that. The framework decomposes price action into 4 independent legs, each producing an upside and downside score before being combined into a single weighted read. The trend leg compares a fast and slow EMA relationship alongside a 200-period macro EMA filter, adding slope confirmation on both the fast and slow averages to distinguish a genuine directional shift from a flat crossover. The momentum leg layers RSI positioning relative to the midline with MACD line/signal relationship and histogram acceleration, requiring alignment across all 3 rather than a single trigger. The volume leg flags expansion using a spike multiplier against a rolling volume average, cross-referenced with candle direction so volume confirms rather than just measures activity. The structure leg applies pivot-based swing detection to identify higher high/higher low or lower high/lower low sequences, combined with a break of structure check against the most recent confirmed pivot. Each leg's output is normalized to a 0 to 100 scale and blended through user-defined percentage weights into a final composite score, which is then classified into strong/medium/weak/none tiers based on configurable thresholds. 2 additional filters, a higher timeframe trend alignment check via request.security, and an ATR-based volatility floor, are layered on top before any composite reading is treated as valid, along with a minimum bar gap and minimum score separation rule to reduce clustering of readings in choppy conditions. An ATR multiple-based framework for risk distance mapping is also included, projecting proportional reference levels at configurable R multiples purely as a visual reference for studying risk-to-reward geometry, not as a recommendation. What you'll take away from this breakdown: how to decompose a multi-factor market red into independently scored, weighted components. Why slope confirmation matters more than a simple moving average crossover. How pivot-based structure detection and break of structure logic identify shifts in swing sequences. How higher timeframe alignment and volatility filters reduce noise in a composite scoring system. How ATR-based multiples can be used to visualize proportional risk distance, independent of any specific outcome. Warning: educational software for analytical purposes only. Trading involves significant risk.